and trickle in as we get going. All right. Good morning, everyone. Welcome to our GCA Forum for Winter 2022. Quick disclaimer before we get started. This meeting will be recorded and retained for the legally approved retention period. It's subject to release upon request. It will be posted publicly to the GCA YouTube channel. And all slide decks for future recordings are posted to our GCA Forum webpage. Alrighty. Welcome. As you join, please make sure you are muted in order to reduce background noise during the presentation. I believe I saw Cheryl posted in the chat, so we can have a couple of reminders posted there as people come in. Please feel free during the meeting to use the chat feature in Zoom
might use
to ask questions.
Russia plans to manufacture a pretext.
We will pause after each segment to answer your questions. Reminder that we want you to be engaged as this meeting is for you. On the agenda today, we have award extensions in year budget, a carryover overview, a rundown into F&A, IDC, and BSC, charges updates, the Lockbox, expired sub-budgets, and the update on the Fred Hutch Seattle Cancer Care Alliance merger. Now to kick us off with award extensions in your budget, I will pass it off to Michelle.
All right, hi everyone, I'm Michelle, and today I'm going to be going over award extensions and your budget. Next slide, please. So we're often asked if you can keep your budget open when the sponsor is going to extend the award. So before we can say yes or no, there's some questions to ask. And to name a few, who's the sponsor? Are they a federal sponsor like NIH? Or are they non-federal like another university? Or are they a foundation? Second, what are your award's carryover terms? And then third, what are your invoicing and reporting requirements? And depending on how these questions are answered, we'll determine if we're going to extend your current budget or if we have to establish a continuation budget for the next year. Next slide. So in this slide, we have a general guide of when we keep the existing budget versus a renewal budget. So in the left column, we have some of the requirements for using your existing budget. So the first one would be automatic carryover. You have no separate year accountability, meaning you wouldn't separate out, the invoicing for each award year. And then also minimal or no change to the award's PO, grant number, or federal document number. And then on the other side, we set up a renewal if we have restricted carryover, separate year financial reporting or invoicing, or you have a new PO or grant or federal document number. And other factors we look at are like the sponsor, again, like going back to what I just talked about, and then also how we've been setting up these awards for the sponsor historically, assuming that there have been no major changes to the award's terms. Because, every award and grant is different. So on to the next slide. So managing pending extensions. So maybe your budget's ending or it's already in status 3 and the sponsor hasn't issued that fully executed agreement for that extension. So in these situations, we'd recommend one of the following: submitting a temporary budget extension if we've determined that we're going to continue using the same budget, or requesting an advanced renewal budget if we need a new budget for that next period. And by requesting a temporary extension or advanced budget, you continue to be able to post charges to your award budget while we wait for that agreement to come through. Next slide, please. So in these next few slides, I'm just going to quickly go over temporary budget extensions and advanced renewal budget. So here, just have an outline of what a temporary budget extension is. So you'll submit these requests to OSP using their budget extension request form, and then OSP will then route it to us as a pack, at which point we're going to update the budget's end date. And then one thing to note is that since this isn't a true extension, it's just a temporary extension, there's not going to be any invoicing or reporting for this period. like those things will be resumed once we have that actual extension in place. And then in the next slide, quick overview of advanced budgets. So unlike the last one where you submit it to OC, these ones are submitted through SAFE using their advances tool. And then once it goes through its approval flow, it comes to GCA for us to set up the budget. And similar to the temporary extensions, there's no invoicing or reporting for this while it's in advanced status. But then once we have that fully executed agreement in place through the funding action, then we'll update all the award details on the budget and then update the invoicing and reporting. Okay. Then this final slide, I just listed out a few resources for additional reading if you'd like to read up more on extensions, advanced budget setups, or just the general process. And that's all I have. Any questions?
Looks like we have one question in the chat, and that is, where do we find the extension form?
So the budget extension request form is linked on OSP's page. I also did include, I embedded a link in one of my slides here. So, and we're going to post these slides to our website after the form. So if you'd like to refer to that, to the slides once they're posted, it'll be there. But I might also pull the link and I'll put it in the chat once I find it. Any other questions?
No other questions in the chat.
All right. If there are no questions, thank you, Michelle. Next, we'll go to Susan for carryover overview.
Okay, next slide. So it's always good to start with a definition, and found a good one on NIH's site. Carryover is a process through which unobligated funds remaining at the end of the budget period may be carried forward to the next budget period. This carryover allows grantees to use the unused prior year funds in the current budget period. Or to put it in more simple terms, it's when you get to keep money from an expired budget and move it to the next. Next slide. So we have two sort of broad types of carryover. We have automatic and restricted. Automatic is cases where the award agreement provides blanket approval to transfer any unspent balance to the next budget period. So that's it's everyone's favorite kind. We like knowing that we have that flexibility. And so if you see that in the award agreement that, an unexpended balance can be carried forward to the next period, you're in good shape with that. With restricted carryover, the sponsor has to provide written approval each time there is an unspent balance that is being transferred to the next period. And so that's part of the process of setting up the new award period. Next slide. So when there's automatic carryover, sometimes we can just set up a single budget number for the entire award period. And that is the case if the award doesn't require final invoicing and or reporting until the end of the full award period. In that case, GCA will set up one budget number. So you'd have one budget number that would go for the whole 3 or 5 years or however long the award period is. And so you're not really going to see carryover in the sense of seeing funds transferred. All the funds will just go in the same budget number and be available throughout the award period. But in many cases, when we still have automatic carryover, there is a final invoicing or reporting requirement for each budget period. And in that case, GCA will set up the separate budget numbers for each budget period. In some cases, probably the majority of cases, this means an annual renewal budget. In some cases, we set up like a placeholder or dummy parent that will have a sub budget for each budget period. I commonly see this with fellowship awards. There'll be a parent budget that is in status 2 and has no funding in it, and all the funding goes to the separate budget periods, which are usually 1 year. And this carryover is normally processed after the final report or invoice for the prior budget has been submitted to the sponsor. So it will be usually a couple months before you see that carryover move into the new budget. But if you know you have that automatic carryover and you know how much you have left, you can already know that for your planning purposes for the ongoing budget. Next slide. So with restricted carryover, GCA will always create a new budget number for each budget period within an ongoing award. In these cases, carryover is processed when the reporting or invoicing is completed for the prior budget, the same as with automatic carryover, but we place the funds in account code 3799 to indicate that they are restricted. And then once we receive approval from the sponsor, OSP issues a PAC to unrestrict the carryover funds, and we can move those out of 3799 and make them available. Next slide. And then training grants are a special case. Training grants, as those of you who work with them know, tend to be a special case in a lot of ways. But with training grants, you have two sort of categories we talk about for unspent funds as an award is closing out. You have, or in a budget period is closing out. An unliquidated obligation, that's a case where you have already committed funding to a particular trainee. Say if your training grant year runs from July through June, but you appointed a trainee beginning in January, so you're committed to them January through December. The stipend, benefits, and tuitions for the remaining 6 months on that trainee's appointment are unliquidated obligations because we have already promised that. And so that is going to be carryover that will go through and be available as the next year the training grant goes on. Unobligated balances, those are any unspent stipend, benefits, or tuition that are not committed to a specific trainee, plus any unspent balance from other cost categories, for example, travel. And those are going to be restricted and will not be available for spending unless the sponsor provides an award modification indicating that they are. Next slide. So questions. It does look like we have several questions in the chat. Let's see.
Susan, the first one is, do we have this information on the funding action? I think we're referring back to the carryover.
Yeah, I don't think it's specifically listed on the funding action itself. Someone can correct me if I'm wrong. You look at the language, it's in the award agreement. And if you're not sure, you can always send a question to us through Grant Tracker.
Okay.
Hi, Susan, this is Lily. I'll jump in real quick to say that we did actually add the carryover information to the funding action a few years ago. So you should be able, especially on a newer renewal FA, to see really clearly whether or not carryover is allowed or automatically, or if it requires approval, or if in some cases there's a dollar amount threshold under which we don't have to submit approval and over which we do. So, but all that should be on the funding action.
Thank you, Lily.
And the next question is, so can a renewal budget still have the same budget number?
No, it does not. Renewal and the way we use it means a new budget number, but linked to the prior one in an old budget, new budget relationship.
Okay.
I see the next one is, what's the difference between unliquidated obligations and encumbrance? Unliquidated obligations is, I would say it's the NIH terminology for those particular funds, whereas encumbrance is a system. It's part of the MyFD system to see that, that we have encumbered funds for a purpose. And let's see. And it looks like that's everything.
All righty. Thank you, Susan. I did see a comment that there was some trouble hearing my mic. Is it better now?
It's still pretty quiet.
Yeah, it's still pretty
Hold on,
quiet.
let's. Did that fix anything?
It's a little better, maybe.
It's about the same.
Hold on, let's see if I can't.
I think it's okay if you want to move forward and then we can check it again.
Any better now?
Yes.
Can you still hear me?
Yes.
Loud and clear. Yeah.
Okay. I had to switch to a different microphone. Sorry, guys. All right, moving on then. So as I said earlier, my name is Patrick, and I'll be going over F&A, IDC, and BSC. So a brief overview of F&A. It comes from our GYM 13 policy, facilities and administrative rates. F&A is also known as facilities and administrative indirect costs, or IDC. So those are just kind of the shortened monikers. F&A or IDC is a rate used to recover the costs associated with sponsored research, but that cannot be specifically allocated to one project. These are things such as lights, the administrative office costs of running the budgets. We bill the sponsor on F&A based on the direct costs charged to the budget, and those costs are determined by the IDC base as to which costs are subject. So an F&A base or direct cost base are what determine the amount that we can charge on IDC. This determines our exemptions. A standard base is base 18, the modified total direct costs. And the common exemptions are things such as equipment, tuition, rent, but it really does depend on your award. Bases are used to negotiate our standard rates with our sponsors, our agency. GCA uses the base in our financial systems to ensure that we charge the IDC on invoices properly. There are 3 different indirect cost rates and bases on each budget. There is your standard rate and base. These are our negotiated standards, and they are determined by the budget's type and location. There's the cost share rate and base, which is what we are allowed to recover on cost share on a budget. This is often the same as the standard, but not always, and that will depend on if the sponsor has specifically spelled out a cost share rate or given specific exemptions that we cannot claim IDC on cost share. And then there's your actual rate and base, and this is what will be charged on the budget's direct costs to the sponsor. You can find all of your budget's F&A info in MyFD under the budget profile. There is listed out your actual rate and base, your cost share standard rate and base, your standard rate and base and your cost share rate and base. And finally, we come to BSC, or budget subcontracts. This refers specifically to the F&A that is charged on subcontract or 0362 expenditures. This typically applies to the first $25,000 per subcontract, but there are exceptions. And that $25,000 is usually throughout the life of the subcontract. So if all of that is spent in the first year, then no future F&A on that subcontract will be charged. These charges are not automatically charged to the budget like the other object codes. And every quarter, GCA goes in and manually applies these charges through a JV. Are there any questions?
Nothing in the chat.
Yeah, guess too.
All right. So it looks like we got one now. If F&A is less than the full IDC allowed, then does the 25K hold? So the 25K is a cap on what we can charge for most budget subcontracts. If you don't spend up to that, then the full IDC rate will be charged on what you had spent. That cap typically applies if we spend over. And if anyone else wanted to chime in, if there was another interpretation of that, does that answer your question?
Yes, just to confirm though, if let's say that for a contract where the F&A is 15%, would
Mhm.
the 25,000 still hold, or would the whole subcontract be part of the do you know what I mean? Like, is the 25K cap still applicable?
I hear you. So the 25K cap is the direct cost cap, meaning we'll charge 15% up to 25,000. The math on that would be around 3,200 in IDC or something like that. But
Okay.
so that is the direct cost cap.
Okay. All right. Thank you.
All right. If there are no further questions, I will go ahead and pass it on to Cheryl.
Well, hello, this is Cheryl. One of the suggestions we got from campus was kind of talk about, well, what kinds of trends are we seeing in GCA? And over the last quarter, we've had 3. So that I will be talking about late posting charges, which are ever popular. The Lockbox, which I think this might be its debut as a subject, and expired sub-budgets. So the next slide. So I'm gonna pop in. So you may remember on the January MRAM, if you guys attended, our director Lily talked about what we're noticing is that our federal sponsors are kind of, they're really trying to shut down late charges. And in GCA, we have been we track them every time somebody asks us to reopen a budget. We do track that because it can be, we know it can be problematic kind of depending on how it all plays out. And the reason it's problematic is, it's really a common flag for the auditors. And then obviously our federal sponsors have noticed that probably across all of their people that late charges are a problem. And so they're kind of tightening the rules a little bit for us. But the issues that we have with like for the university, we want to make sure that our charges are posted timely because we want to be compliant. And especially, like our cost reimbursable awards too, we have to get invoices out. Sometimes we've billed in advance, which is, we're not supposed to do that. And it gives us extra cash on hand. The one about the sponsors becoming more strict, I think we're seeing that more and more. And at the MRAM, Lily kind of talked about, we're working on trying to find try to have a policy that really helps get those charges posted timely. We realize if we have extra cash, we may end up having to refund it if the charges aren't posted timely. And so the call to action was for everyone to work with their vendors and their subcontracts to make sure you get those invoices in on time. So that because we also are beholden to our sponsor. On the next slide, please. Some other things that we've noticed. So all the federal awards that use the payment management system or the PMS, we noticed that once we submit the final report, they shut the access basically to the drawing. So basically they close up the account on us because we've submitted the final report saying that we're done. We've also noticed that, so some sponsors have different deadlines. I think, is it NOAA, the oceanic folks have 90 days, some have 120 days. So it's the final action dates become really important to know what they are. We've also noticed that like holidays will impact the closing of the PMS accounts, basically our access to get reimbursed. And we also know that in September, I think they annually kind of close it a couple of weeks in advance. They always let us know. So like this would impact in awards that may be ended in June. We got to get those final charges posted so we can be reimbursed for those. So right now in the last really the last month or so, we've been kind of like testing new approaches to try to figure out how to accommodate charges after the final action date, which we really are trying to get away. We want charges posted by then, but we do know that there are times like where a sponsor needs an invoice the day of the last day. So we have to work, together on those. Those are tricky. The next slide, please. We've also learned the hard way that the process to reopen the PMS or the account it's pretty involved. The federal sponsors are one of the things we have to do is we have to send a formal request. In that formal request, we have to say, well, why are we asking for this account to be opened after the funds have expired or were late? And we also have to say, well, what are we doing? Like what changes are we making so that this won't happen again? So that's like something that's the recent change that the federal sponsors have made. So we basically have to, the campus will ask you for kind of like what's going on and what's the justification. And we have to write up the request, and then it goes through OSP, who also has to get involved in this. And then it goes to this, the contact for the sponsor. And then if they approve it, we got to get those charges posted. And then while the system is open, GCA would then also have to submit a revised report. And so that's a lot of things to be happening. We've also discovered that this applies to both charges and credits. It used to be that credits could just come through. So these are credit might be, you discovered a charge we posted that we should not have, or a vendor, one of our subcontractors came back and was like, oops, we overcharged you. And it doesn't matter the amount. We all know for federal, we got to get that. We have to get any amount back to them. And so we have to go through the same process. So that's just so everybody kind of knows what we're seeing now. Okay, and the next slide, please. So what we're hoping right now, or kind of shooting for, is that we really need to get the invoices from our subcontractors ahead of time, so you guys have a chance to review and approve. I think we've seen a couple times where people got a late invoice from a subcontractor and it wasn't right, and so then they had to do some back and forth, which takes time, right? And then we've also seen where a subcontractor might say, yeah, we've billed you for everything, and then well after their due date to us, they'll come back with a fairly hefty charge and say, but wait, there's more. And so really they're the ones at risk for something like that. If our subaward said you have to get your final to us in 45 days or 60 days, and they're coming to you 75 or 80 days, we may or may not be able to pay that. One thing that we're trying to do is, if there's a longer period of time that we could allow more time, we really are trying, but we really have to follow what's happening with our sponsors, right? Okay, the next one. So the cost reimbursable, I'm going to switch it over. These are the ones where we're invoicing our sponsors, or we're the ones asking for payment now. And now it's on us to make sure that our final invoice is on time. And that allows, the person that gave us the subaward or our sponsor time to review our invoice and agree to pay it. So what we've kind of come to the conclusion of is we've gotten requests to, oh, don't send the final, not everything is posted. And we've realized if we do that, what you're risking is everything that did post timely, not because if you send a late invoice, our sponsor is not obligated to pay it. So what we think is a better plan is get that final out and ask the sponsor if you can issue a supplemental final, which is in addition to. And so that what's at risk is only the charges that are late. So I just want to say this is a work in progress. This is also a really high level overview of kind of where we're at. And so I know that you guys probably each are thinking, but wait, I have this case, and you do have that case. And for specific issues, just contact us, and the sooner the better, depending on where things are with that. And so I'm wondering if there are any questions.
There was a question in the chat about what do we do about subcontractors who come back 2 or 3 years later with a credit due to an audit at their institution. And Juan responded that we always have to refund credits to the sponsor. If the account can be reopened, we'll have to include what happened in the justification. And I can add that in some cases, we get those refunds so late that refunding it through the PMS system is not an option, and we'll have to issue a check. But regardless, if we get a refund from a subcontractor or other vendor, we have to pass that on to the sponsor. Have another question. ProCard charges normally post a month after. Will that cause an issue if our budget ends in January when the charge posts in February?
It could. So I would say that's the kind of thing you'd want to let us know about. A charge, so like if the budget ended in January, you're right, the charge would, a ProCard charge would post the 10th of February. But if it ended January, that would be a special case where that would tell me that if the sponsor wanted their invoice on that January 31st date, we would need to know what was out there. And, those are like the hardest to try to accommodate, because you have no time. Your salary will not have posted for January by the 31st, right? It's, the salary posts a little bit, like what, 4 or 5 days after the payroll cutoff. So that on something like that, it would be okay. Typically we get, I would say this is just generally speaking, we have 60 days. So for an award that ended January 31st, we would have until the end of March to provide that final invoice. And truly a ProCard charge that was incurred in January really should post, by March 10th at the latest, right? And so I think most of those go okay, but you're right that those are sometimes the hardest ones to watch. And then also to add to Juan's thing, when we were asking about a late credit that's years later, we still need to have to revise that report too, so that it matches the end. Okay, all right. For its forum debut, we have the Lockbox. We have learned a lot this last month or so. I thought I'd start with like a nice high-level overview. The Lockbox is a service that we have hired, or we've used Bank of America for. We chose the Chicago location. A lot of you might wonder, why on earth would we have our Lockbox in Chicago when we are clearly a Seattle university? And the answer is because it's in the middle of the US, and a lot of our sponsors are on the East Coast, and it seemed like a really good location. The benefits of using the Lockbox are pretty great. They receive checks there, they scan them, they deposit them right away, so that basically the university gets paid right away for all those checks that we receive. The scans are great. They scan the front, the back, they'll scan the envelope. If there's any correspondence that's sent, they scan that too. banking and accounting, and anybody with access to the Bank of America account, which is usually cash teams, can see the images and get that information. So like when we're looking for did a check come in, you can search, and then you could look actually at the check to see if it's the one. But what we also learned is that it's a huge warehouse that processes payments for hundreds of customers. And so we're just one of many there. So the way things get to us is we're identified by the address includes basically our box number, which ours is 12455 Collections Drive. Collections Drive is just the street that this warehouse is on. I do have a link, so if you ever need, like a sponsor wants to pay us some money, we love that. And we do have I put a link in here to the GCA page that has the full address that does say Chicago, Illinois on there. The next slide, please. And here's kind of our big lessons learned. The lockbox is intended for grant and contract payments only. It's not for general UWs. One exception that we can make is if, especially with, the pandemic and things, is refunds from vendors, which I think we used to refer to as reverse expenditures. They can go to the lockbox, but they have to include the important information, which is which budget does this go to and which object code are we crediting. Otherwise, we think it's a payment. And so we want to make sure that we get it posted to the object code, so we're offsetting the charge total, not the award amount or the cash received there. It's kind of a subtle difference. We also learned that checks need to be made payable to the University of Washington. If they are made payable to, I don't know, a PI or a department or a different school, like, College of Engineering, Bank of America people aren't going to know exactly what that is, and they're going to assume it's a mistake, and they may reject it. So we've had a number of checks that we couldn't figure out why they didn't make it to the lockbox, and it turned out they did make it to the lockbox, but they were not paid properly. And I'm not sure what that process is, whether they just out and out reject it or if they let us know on that. We also learned that overnight couriers can get checks to the lockbox, but once they're there, we've noticed that when checks go missing, it turns out that they will have been delivered by overnight mail. And there can even be a signature. And since we don't really know how they operate, what we have noticed is that if people use the US, just the regular US Postal Service, it's not as fast, but those checks get delivered properly. Somehow, whatever the process is at the lockbox, the Postal Service is the better way to go for those.
So we have a couple of questions. We have one question. When we send checks to the lockbox, how long does it usually take before the funds post to the UW budget?
Okay, that is actually a really great question. So let's just say that like if the check is deposited, it comes to the lockbox, they open it, they deposit it. And if it gets deposited today, I believe that tomorrow would be the day that our cash team gets that bundle of checks, like, that day's work. So they would post it if everything is listed there, like this goes to budget 1, 2, 3, 4, 5, 6, and there's an invoice for it, we can have that posted that day, and then you'll see it the next day, right? Because whatever we enter today is visible in the system tomorrow. If we don't know where the check goes, we have to do some research, and that does happen. Like sometimes we'll get a check and we don't know where it's supposed to go. Those can take longer. So highly recommend throwing a budget number or an invoice number, some kind of reference that helps guide us to put the check to the right invoice.
Okay, we have another question. Does this mean the payment address is changing?
Nope. This is what it's always been. So, so if you look at any of our invoices, we've really updated our invoices. I think they're pretty great. They tell the people that we're billing, you can pay us by ACH. Here's our ACH information. You can pay us by wire. Here's our banking information for a wire. And you can send us a check. And here's our address to send a payment to. And so the lockbox has been on there. But what the reason we wanted to talk about it now is because we've been seeing cases where checks have been not received. And so that's kind of been what we're trying to address here.
Have another question. Is there discussion regarding how communication to the Lockbox folks will be handled when we transition to a new budget number with UWFT?
I am going to say there probably has, but that's going to be on a cash, like the folks like probably banking and accounting, and then our cash team. I imagine that's going to be a big transition, and I'm not privy to that but I know they must be talking about that.
That's all I'm seeing in the chat.
Okay, great. On to my last one. This is the expired sub-budget. Some of you probably have gotten some grant trackers and might be wondering what's happening with that. And one of the things that we realized is that expired sub-budgets should follow the same rules as a regular budget, and that is to close within 120 days of expiration. And so what we started doing is at 90 days after a sub has expired and it hasn't been updated and the parent isn't closing, GCA has been sending grant tracker messages to the contacts on the budget and asking, can we close this? Or should we extend it? Kind of let us know. And so the best practice is, if you get one of these, is let us know whether we can extend it, because we can extend a sub budget as long as the end date doesn't, go longer than the parent. Or if you're done with that sub and you don't have any more, you're ready for it to close, you can say, please close this, and there's a balance that we want returned to the parent. We can do that for you. And then we'll get that sub into status 4, which is great. It keeps any unwanted charges from posting and that kind of thing. And then we also have kind of a, what happens if people don't reply. So the next slide, please, is kind of what our process is. This is sort of a little bit of a change for us, is that if after 10 days we don't get an answer, we'll kind of take a look. Well, if it's just a regular same organization code sub as parent, we're probably going to send another email or grant tracker that says we're going to go ahead and close this and return the balance to the parent. And if the sub is in deficit, we're going to basically sort of do the same thing. We're going to take money from the parent budget to cover that deficit in the sub. And basically what that means is just move revenue to cover it. It's not a deficit transfer. And then we're going to be closing these out. So that is kind of a change. And then if the organization codes are different, we'll refer to the original TransPESU or TPU request to find who is the responsible organization, org code for it. If we do end up closing one and you realize you do need it, you can reopen. These are not going to be purged or anything. And then if you do need to put money back into one, you would just use a TransPESU to, again, move money in. But ideally, the notices will serve as a reminder that if, now's the time to update the end date if you want to keep using it, or add money, or kind of whatever needs to be happening. Are there any? Pretty sure the next one is. Are there any questions?
Yes, we had a question about Can you please remind us what status 1 through 4, I think should be, represents? And Sarah posted a link with the budget statuses.
Okay, generally, quick over. Status 1 is open to everything. Status 3 is closed to new expenses, and status 4 is closed.
And you've also got, and I think this may have just been discussed, do you mean you can reopen sub-budgets after you change the status to 4?
They can be. Yeah, if you need them, as long as the parent budget's still going. I'm trying to think a case where that might happen is if you thought you were going to get a renewal budget, but you ended up keeping the same parent, or that stayed the same, the parent budget just got extended, you might want to keep that sub going. So if it got closed earlier, you can ask us to reopen it, or you can ask for a new one, whatever, however the management, what works best for you.
Okay, that looks like all the questions.
Okay, thank you.
Thank you, Cheryl. Next up, we will pass it to Azalea.
All right. Hello, everyone. I am Azalea Vasquez, and I will be presenting on the upcoming Seattle Cancer Care Alliance and Fred Hutch Cancer Center Research merger. All right, next slide, please. So last summer, it was announced that Fred Hutchinson Cancer Research Center, UW Medicine, Seattle Cancer Care Alliance, and Seattle Children's would restructure their relationship in order to bring their world-class cancer care program to the next level. As part of this restructure, Fred Hutchinson Seattle Cancer Care Alliance would merge, forming the Fred Hutchinson Cancer Center, so FHCC. It will be an independent, private, not-for-profit organization, and the Fred Hutchinson Cancer Center would be a comprehensive cancer center that is clinically integrated with UW Medicine and focused on treating adult cancer patients. So after this announcement was made, the leaders from the 4 organizations began discussing the restructuring plan with all their stakeholders, and they were trying to secure all the necessary board and governmental approvals for early 2022. Next slide. So now here we are. It's early 2022, and the first week of January, some of our campus customers started receiving notices from Fred Hutch regarding their Cancer Center Support Grants, so the CCSG grants. So I would like to say a special thank you to all the campus customers who immediately sent us copies of these notifications, because none of them came to GCA directly. I was then able to let our GCA leaders know what was going on, and they were able to loop in OSP. So we have also received other notices asking for estimated unobligated balances of your subawards from Fred Hutch as of March 31st, 2022. Some of these notices, again, are going straight to the PI and administrators. And some of them are coming to GCA and OSP. Next slide. So the Seattle Cancer Care Alliance and Fred Hutch merger is new and evolving, and both GCA and OSP are trying to find out all we can about the situation as it unfolds. We are also in close contact with our Fred Hutch counterparts to help facilitate the process. Both our offices are working together to provide guidance to campus on how to navigate this process. And those of you who subscribe to the MRAM mailing list should have received our first notification this morning, with many more to come. Next slide. So if you have any questions, please don't hesitate to send your inquiry via Grant Tracker for any of your budget specific questions, or GCA help if you have a general question, or if you're getting more notifications and you're not quite sure what to do, or if we need to be looped in. Does anyone have any general questions about that?
We just have one that just came in. Do you know if staff assignments will be impacted?
Yes. everything that we have going on with Fred Hutch is going to be impacted. And so for sure, the staff assignments are one of them, and it is part of our notification from this morning. So the staff assignments are going to end March 31st, or no, they're not. Staff assignments with an end date past March 31st will not be reissued under the FHCC name. So Fred Hutch has confirmed that the staff assignments will continue to be effective through the end date of the current staff assignment. Billing and invoicing will be handled per usual process. When and if they are renewed, submit a renewal after the fact EGC one. So staff assignments that end after March 31st, more details will be coming about that from us. So again, if you look at the notification, we've got a lot of great information for the majority of the awards, but some of it, again, this is so brand new. We are still working within our organization, GCA and OSP and Fred Hutch, to get more details on how those specific awards are going to be handled. Next question.
We've got, how about outgoing contracts for service with Fred Hutch? I didn't see that on the MRAM notification, but might have missed it.
No, so you didn't miss it. There's a very brief mention, basically letting you know that we haven't sorted out a process for that, and we will be working on that and sending that out as soon as possible.
The next question is, what about BPOs to both SCCA and FHCRC? Will they continue to pay SCCA after March 31st, even though SCCA will no longer exist?
Okay, so that loops into the first question. So we're still working through that, but again, what we know is FHCRC ends on March 31st. And so we're trying to get as much information as we can on how that's going to affect our outgoing subcontracts, the BPOs. The only thing that I can tell you is, once we start working on those, let us know that they're linked to the one that, like the prior one, because what we don't want to do is we don't want to charge the first 25,000 of IDC again by accident. So again, more information about that will be forthcoming, but I just want to let you guys know about that in advance. Next question.
Are subawards affected?
Yes.
And is the Hutch moving away from basic research, thus those types of funding instruments?
That I do not know. Again, this is more of a name change and merger situation. And so we're really not sure 100% how that's going to change the research part of it. So I guess stay tuned. I'm sure that more of that information will be forthcoming in the next couple of weeks.
Okay, and Juan has added a comment: outgoing subawards to Fred Hutch, FHCRC, that extend beyond March 31st will be terminated as of that date, and new subawards reissued to FHCC. Details about the process for these actions are being finalized and will follow in a separate communication. And another question came in: do we still keep paying for subawards for now?
So to loop back to Juan's comment, again, the end date is going to be March 31st, 2022. We know that that's coming up real quick. And so please don't panic. We are trying to find out all we can how to handle this, because we want to make sure, we're all in this together. So you're not alone on campus. Don't feel like you don't have any direction. You don't know what to do. Send us your questions. And trust us, we've thought of every scenario, and we're right there with you as far as trying to figure this out.
Okay, and that's all the questions I'm seeing for now.
All right.
I think the next slide.
Yeah, that wraps up our
Oh,
topic.
I think there's
So we
one more slide.
do have a
Patrick.
special slide
You do have a special slide. Thank you. So one of the biggest trends happening in GCA is that our director, Lily Gabrenigas, is going to be leaving GCA at the end of this month, which is real fast. And she is going to be moving to Italy this year. So we wanted to say a special grazie and arrivederci to you, Lily. And this was our little tribute to Lily that we did, where we wanted to make sure she was always looking over our shoulder. So we used a background and did this for her. But really, honestly, we want to say thank you. And if anybody, want to send Lily a little thank you email, you just got about a week.
I'll say thank you very much. I did not anticipate this. This slide was not in the draft deck that I looked at a few days ago. Otherwise, I would have hidden it. Thank you, Cheryl. Thank you, GAs. And thank you to campus. Every time I come to a forum, I always see a lot of familiar names and faces, and it's just always reminds me of how much time I've spent at the university working with all of you. So I just appreciate everybody's sense of collaboration and willingness to, try to do the best that we can with, of course, all of the things that are going on in the world right now. So thank you very much. And I will miss everybody.
We will certainly miss you too, Lily.
Yeah, for sure.
Well, that concludes our meeting. If there are any lingering questions, you can feel free to contact us either via email at GCA Help, our GCA Help hotline between 9 to noon and 1 to 4, or you can open up a grant tracker for more budget specific questions. With the 3 remaining minutes before lunch, if there are any urgent questions, we will remain in here and answer or just chat.
I am seeing a question. Will we be able to access the recording? Yes, we should have that up on our website today or tomorrow, probably.
Thank you, everyone.
Thanks, Danielle.
And with the end of the meeting, I would like to apologize for the technical difficulties on my end. This is my first time hosting one, so sound issues and mutes. Hopefully we'll get ironed out next time.
Thanks, Belinda.